But I guess that the momentum is such in the market that there's a lot of positive news flow there. But let's do one thing. Crude is back on the boil. So Brent crude surged overnight. There have been rising tensions once again in Kiev with rising casualties, especially of civilians. So that continues to be a headwind. Manisha Gupta is here to give us a quick roundup of what's happening there. Manisha, morning.
Morning, Vali. As you said, the momentum is higher in commodities as well. And yes, with what's happening in Ukraine, there could be more sanctions coming in on Russia because the European Union is talking about that in the day-to-day. Apart from that, with the consistent demand that you've seen come in from Asia, Saudi Aramco is increasing Asia shipment prices by $4 to $9.35. This is a record premium that Saudi Aramco has charged Asia. The demand seems to be good, and even at these higher prices, you haven't seen a demand destruction come in yet, and that's exactly what Saudi Aramco is making benefit of. And because of the rising crude prices, you have seen support come back in case of sugar, which is trading at a 4-week high. You also are looking at rubber prices trading at a 1-year high. All of that because of the crude spillover, and the metal prices because of the supply disruptions are back in flavor right now. So whether it's copper, aluminum, or even zinc, which is trading very close to its record highs, there are supply disruptions. The inventories have been declining and the demand seems positive. All of that is back in flavor, and almost all commodities trading in positive in Asia.
All right, Manisha, thank you very much for that. So commodities and oil very much top of mind. It remains so. We'll take a very quick break here. We come back, and of course our first guest on the show is joining us to talk stocks. Dipan Mehta of Elixir Equities will be with us for that in just a bit. We also will be speaking with Pralay Mondal of Catholic Syrian Bank, CSB Bank, to discuss their fourth quarter pre-quarterly update. We're back with both those conversations in just two.
Welcome back. Well, we've had a big run from the recent lows. The Nifty is up 11% in the last 1 month or so, almost 2,000 points and counting. And of course, the Bank Nifty even more. Dipan Mehta is director at Elixir Equities. He's joining us. Dipan, good morning. Thanks for joining us. The first question, of course, is on the big deal of yesterday, HDFC and HDFC Bank. I remember you used to say that, the best time to buy these is when there are concerns and when these stocks are underperforming. And of course, yesterday it is just one day and a lot of that underperformance was corrected. But more gains from here, you reckon?
Good morning, Anujan. Thanks for having me on your show. Absolutely. I think first a disclosure that we and our clients are investing in both the companies. And I think this is a win-win situation. And if you have underweight position in HDFC group companies combined, then even at these levels, it makes sense to go at least 5-7% in your portfolio in these companies on a merged basis. Considering the kind of growth rate that HDFC Bank has just reported and the fact that many opportunities to cross-sell will emerge when companies are merged together, augurs very well for the companies. At 11% market share, there's considerable scope to increase the market share as well. And last but not the least, I think a technical factor is that maybe because of the merger, there is some float available on the MSCI side, and that may result in billions of dollars getting poured into HDFC Bank once the merger is completed. And one of the reasons why HDFC and HDFC Bank had been correcting it because of the relentless FI selling, but now that may get reversed. So I'm very positive on the merger, very positive on both the banks, both the bank as well as the finance company. And I think that the era of underperformance of these companies is now over and done with, and you should see them to be market performers or outperformers.
Okay, market performers or outperformers. What are your thoughts on Bajaj Finance? The new loan growth has been pretty strong for them this time. New loans have gone up about 15% year on year. Did you like the update? Would you put any fresh money here?
Yeah, good morning, Sonia. I was expecting slightly higher growth rates. And even the client addition has been a bit subdued, I would say, at about 2.3% or thereabout. But nonetheless, I think the company should report excellent set of numbers. And that's true for the entire banking and NBFC sector. I think these are blue sky scenarios for them where loan growth is improving. So a lot of fee-based income comes into play. And all the provisioning for NPAs is over and done with for almost every bank and NBFC. So you should see surge in profits for these companies. And considering the valuation of the sector, even companies like Bajaj Finance, HDFC Bank, there is scope for P's to get rated on the higher side. So maybe I think with the kind of numbers which have come from the banking stocks and the NBFCs and the HDFC twin merger, we may see banks again taking back leadership position, and more money may pour into those sectors, and the expectations that this quarter would be an exceptional season for these banks to report exceptional numbers.
Okay, since we're talking about banks and strong loan growth, let's take that discussion forward with CSB Bank. They posted a mixed Q4 business update, but loan growth has picked up very sharply for the bank. Although the CASA growth looks a bit weak, advances are up 9%, deposits have seen a 5.5% rise. So overall, the momentum is definitely picking up. Pralay Mondal, the interim MD and CEO at CSB Bank, joins us now to talk about that. Mr. Mondal, good morning and thanks for joining in. Loan growth has seen a sharp pickup. Can you give us some details on where you saw the maximum demand and what could the trend be in terms of loan growth over the next 3 to 6 months?
Thank you, Sonia, and thank you for having me on your show. I think we had a good last quarter. Actually, if you look at this year vis-a-vis last year, gold loan is one of our largest portfolio. It's almost 40% of our portfolio. And because of regulatory change on the LTV and other things, first 3 quarters were a little more muted. And then we could erase that LTV issue. And then in the fourth quarter, we picked up our growth on the gold loan as well. Our wholesale business and the SME business also did pretty well. And overall, the loan growth picked up in the fourth quarter, much better in the first 3 quarters. On the deposit side, I think we had a consistent growth in CASA. And the deposit growth picked up in the end of the year, in the fourth quarter. But while CASA growth is always welcome, having excess liquidity and then not able to lend that into the market creates name issues. As you are aware that we have one of the best financial ratios in our peer group, and we have to retain those kind of ratios, and hence we have to balance out the liability and the assets book with having excess liquidity doesn't help. So we had one of the lowest interest rate in the FD rates in the industry.
Got that.
And that helped
got
us.
That. Pralay, actually, good morning. Let me just probe you on that, because your CASA went up, but not as much as the other banks. And you're saying that if that's a conscious call because you want to keep your margins high, that's not translating into operating profit growth if you go by your quarterly numbers.
So if you look at it, I never said that CASA growth. CASA is not just a deposit business, it's a franchise business, because as we add our new products and businesses, which we are going to do in a major growth momentum in the next few years, we need a lot more customers in the bank. And to get customers, we need to build up a larger CASA franchise, and we will do that with better quality franchise. So CASA focus will remain always. But if you look at our yields and our cost of funds, and hence the NIM and the spreads, I think we have done a pretty good job on that, and we'll continue and want to sustain that. Operating profit growth will come out of also volumes, and we have been cautious on the credit side. And as the momentum picks up and the GDP growth picks up, we should be able to participate a lot more. So operating growth will not just come from NIM, but it will also come from the book growth, which we'll focus on now.
Pralay, hi, good morning. Prashant here. A couple of questions. One, how are yields on gold loans looking? And because this is competitive intensity in that segment has picked up materially. We speak with Muthoot regularly, and they acknowledge that as well. So what is the situation there? Second, how is the kind of on the workforce side, how are things shaping up? There was some initial resistance with unions, etc. Is that all that's kind of sorted? And number 3, what is happening as far as the new CEO position is concerned? Where is that process at? Because the term ended on the last, Mr. Rajendran's term ended on 31st of March. Go on.
Thanks, Prashant, for the question. So let me start with the gold loan. Gold loan, definitely there is a lot of momentum in that, and that will continue because, as you know, the amount of gold which is there with people and against which you can actually get a cheaper loan compared to unsecured or those kind of loans is much more available. And today that awareness is there. It used to be only in the southern part of the country, but now it is across the country. So I think there is a lot of opportunity, and you are seeing more competition out there. Having said that, we had, not only we, the banking system had a little bit of a challenge on the gold loan growth this year, primarily because of the LTV. As you know, that the LTV was brought down from 90% to 75% this year. And that automatically, so tonnage growth for us this year was quite good. Tonnage growth means basically the amount of gold. But in terms of value growth, because of the LTV, it came down a little bit. But I think gold loan opportunity is huge, and that will continue. And if you see next year onwards, I think we will be back to the growth path on the gold loans because this LTV issue is over. And we have done a tremendous job of retaining the customers as well as ensuring that the quality of the portfolio in terms of slippages and all that has been well maintained. I mean, we cannot talk everything today on this call, but as we come out, we will see that we have done a tremendous job on growing the portfolio, retaining the quality of the portfolio.
Got that. Yeah. Sure. No, yeah. I guess also, Prashant was trying to get at what an average growth rate would be. And you did mention that the gold loan portfolio is growing at a sharp pace. You've seen a gold loan growth of almost 13% year on year in the quarter gone by. Is that a run rate, 13 to 15%, something that one can reasonably expect, or can you do better than that in FY23?
I think we should do better than that. I mean, there is no two ways about it. We'll do better than that. And to add to that, we just don't want to be a gold loan bank. So obviously, we are going to create a lot of momentum on the SME, on the wholesale, and also we are going to launch a lot of retail products this year. So you will see a overall all-round growth, and hence while gold will grow faster than what it is growing today, but the mix of the gold loan business over the next 2 to 3 years and 5 years will start coming down, primarily because of our overall balance sheet and the overall asset book will have a better mix of diversified businesses. So that is par for course for us, and we are all working towards that. Coming to the next question, which Prashant asked on Mr. Rajendran, I think he had a tremendous innings in the bank, and he turned around the bank to where it is today. And from here, we can dream to make it much larger, and that's exactly what the board vision is. We will ensure we execute that. Yes, he took an early retirement on 31st March because of some health issues. Right now, I think between board and NRC, they are working with RBI to finalize the CEO. I'm taking it interim for the next 3 months, and then we'll see how does it go from here. But the bank where it is today, I think it is only going to get stronger and stronger over the next 5 years and 10 years. There is no two ways about it.
Brilliant. Thanks a lot for joining us. Sorry, we're running out of time, but thanks a lot for joining us. Let's move on then. Dipan Mehta is still with us. Dipan, of course, CSB has been an underperformer, but other tier 2 banks, anything that you like? There's been AU, Federal, couple of others as well.
Well, AU Small Finance Bank is perhaps the only bank with growth rates higher than HDFC Bank. And you need to ask yourself that beyond HDFC, ICICI, Axis, do you need to buy any tier 2 bank at all? End of the day, what are they bringing to the table apart from the fact that they are cheap? They're not able to grow faster than these tier 1 banks, and they're intrinsically more risky than the larger banks. So what are you getting into, just hoping and expecting that the P multiple price to book will move up? I don't think that's a sensible strategy. So now within the banks and NBFC, it is extremely clear that 100% of the portfolio allocation has to be in the top 2-3 banks or so. You could add an SBI bank for SBI for getting the PSU flavor in there. But by and large, I think all smaller banks, NBFCs, need to be avoided. On the NBFC side, you have Bajaj Finance, and that's about it. I think no point looking at the likes of CSB or RBL or Bandhan Bank. I think all of these banks should be gradually discarded from the portfolio and replaced with HDFC, ICICI, Axis, and maybe an SBI.
Anything, Dipan, on these consumer names? Titan, Jubilant Food, maybe United Spirits. Maybe a few of them will provide us with pre-quarterly updates. Titan does usually. Going by the quarter they're reporting numbers for, etc. I mean, should be a good one. But on margins, will there be trouble across these consumer companies?
Prashant, I think a lot of these consumer-facing companies are well discovered, well researched, and I would say priced to perfection. And one could perhaps even expect a mild disappointment because always on news, on quarterly numbers, if they're not exceptionally good, we do see some selling pressure. So I would stay away from buying these stocks at this point of time. They may be great companies, but from a risk-return profile, it's not the best time to enter these companies. The best time to buy, of course, was when about a month ago or so, when they had corrected significantly because of geopolitical issues. But long-term investors can certainly remain invested, but keep in mind that you may have a 5-10% correction at any point of time because results may be slightly impacted on account of higher input costs. But that doesn't mean that a long-term holding should be sold off because just one quarter numbers are missed or maybe a softer performance is there. But the best time to buy these companies is when there is blood on the street, which is not the situation just now.
We need to take a break with the news that most of the Asian markets have moved in the green. This morning there were a couple of markets with red tick, but most of them now are in the green comfortably at that. And the SGX Nifty as well has moved almost to the high point of the day. Once again, 18,193 is what we have on the Nifty futures trading on the SGX. We'll take a break. Once we come back, Mitesh Thakkar and Prakash Kaba will join us for some technical trades. Welcome back. A lot of stocks that we'll keep an eye on. Of course, SBI Live for that blog, the quarterly updates from most of the banks, the metal stocks, follow up in HDFC Twins. Let's ask all these to our experts, Mitesh Thakkar and Prakash Kaba joining us now. Good morning. Before we discuss stocks, Mitesh, index trade after yesterday's big expansion, do you think today there could be some consolidation or is this just now a one-way street?
Good morning, Anuj. So yesterday, we talked about the fact that we could possibly head towards this 18,300 levels, which is where we have had some weekly closing highs. My sense is that I think today, after the gap up and maybe mild, follow-up gains, there could be then a phase of consolidation coming in. So the initial idea is to be inclined to take profits as we get closer to 18,280 to 18,300 zones, and then wait for some kind of dip to happen. Historically, on a couple of occasions, we have had intermediate tops being made at these levels. So it will be prudent to take profits as we get closer to about 18,300 levels.
Prakash, good morning. What's your index trade? I mean, if you are long, where does the stop loss move to? For fresh trade, what would be the call?
Well, good morning to you, Anuj. I think 17,900 is a very crucial support to work with. Looks like a double top when you look at the intraday. But if it opens the gap up, it's good. 18,200, 300 is possible, but I would watch 17,900. As long as it stays above it on Nifty, 17,900, I think we are up. As far as Bank Nifty is concerned, I think 38,000 is a very crucial support to look at, and looks like Bank Nifty is up. So Bank Nifty could be going higher. If that happens, I think it will give some kind of a strength to Nifty as well.
Okay, so let's talk about individual stocks then. What are the stocks that you'd buy and sell now? Mitesh, would you continue to focus on the Bank Nifty after the kind of moves that we saw yesterday, or are you looking elsewhere?
I think today I don't have a financial or a banking name. In fact, I do have IDFC per se, but I think broadly, it would be wise to trade on the long side, and I've got all 4 buy calls. Gujarat Gas is a buy with a stop below 505 for a target of 528. HCL Tech is a buy with a stop at 1174 for targets of 1215. I just mentioned IDFC. Keep a stop here at 64. Look for targets of 70 in the short term. And IEX is the final buy call. Keep a stop at 232. Look for targets of 252.
Okay. And Prakash, in terms of your calls?
I'll go with Jindal Steel. That looks good to me. Seen a good consolidation last couple of days. Yesterday's move was good. Jindal Steel can climb around 560 plus zones. Stop below 540 should be fine on Jindal Steel and Power. Second stock that I like is Voltas. I think Voltas, the move is just started. I think it's going up from here. I would have a stop below 1265 and continue it up. The first technical target on Voltas will be around 1300 and it's going higher as well. So Voltas and Jindal Steel are stocks to look for.
Let's do one thing. Let's get some FNO calls as well. Shubham Agrawal is joining us, CEO and Head of Research at Quantsap Advisory. Shubham, good morning. We had a massive breakout, of course, yesterday. Do you expect follow through, and what would be your calls now?
Hi, good morning, Anuj. So certainly, if you look at the derivative data on the indices, it has consistently been adding longs, even though the reward to risk might not be very lucrative at this point, but I think stock-specific action will continue. So I have an all-buy list today, the first one being a buy on Hindalco. And if you look at Hindalco, even though we saw a short-term correction, but that was only led with shedding in the OI. So the overall structure remains healthy. A 600 strike call option can be bought for a target of 25 with a stop loss at 12. The second buy call is on Tata Chemical, where for the last 10-15 days we have seen a long unwinding cycle, and the overall structure looks healthy with massive OI addition that we have been witnessing in past. So a 1020 strike call option on Tata Chemical can be bought for a target of 44 with a stop loss at 28. And lastly, Oberoi Realty, we saw a breakout happening a couple of days back. And the overall structure for this sector looks very positive. So Oberoi Realty is also a buy. A 1000 strike call option on Oberoi Realty can be bought for a target of 48 with a stop loss at 30.
Thanks a lot for that, Shubham. Have a great day. That's some trading ideas coming in from Quantsap. We'll take a quick break. We'll come back with the pre-opening rates. We will also connect with Kapil Singh, the auto analyst at Nomura, to decode the March auto sales numbers. Stay with us. Welcome back. Well, let's talk about some stocks in focus now. India's anti-monopoly watchdog, the Competition Commission, has ordered a probe into Zomato and Swiggy. Now, this order follows allegations that both companies have abused their dominant position by delaying payments to restaurants and charging exorbitant commissions. The CCI says that there is a case against the companies over some charges and the probe will be completed within 60 days. What happens to the listed entity? Karan Taurani, the Senior Vice President and Research Analyst at Elara Securities, joins us now to talk about that. Karan, good morning. You know, probes like this are a big regulatory risk for companies like Zomato at a time when there's already pressure in terms of, earnings, etc. Do you think this could take down the stock and could be an overhang for a while until the probe is completed?
Yeah, so I think definitely, it is a big regulatory overhang. And I think in terms of the stock moving further downward, there is a very low likelihood because the stock already has corrected by almost about 60-70% from its peak. Now, what exactly is happening here is that, before the pandemic, there were discounts that were given by the aggregator platforms. And in terms of the losses by these discounts were shared by the restaurant and the aggregators. And since the pandemic began, the entire losses of the discount was passed on to the restaurant partner. And if you look at some of these small cloud kitchen operators, if you look at the standalone restaurants, they are clearly struggling because they are anyways paying a high amount of take rate. And all the order volumes, were actually propelled by discount because once you have discounts, there is a customer willingness to try out the food from these kind of restaurants. So I think because of the discounts coming down, these restaurants are now struggling in terms of volume, and that is having a huge impact somewhere. And we anyways believe that at the time of the IPO last year, when the stock got listed, there was a very low likelihood of take rates going high from here on because globally the take rates are in the range of 5 to 15%, whereas if you look at something like a Zomato, the take rate is about 17-18% already. And for the new operators or the standalone restaurants or the cloud operators, it can even go as high as 27 to 28%. So I think definitely, there are clear signals in terms of, concerns around the growth rate for Zomato.
Karan, could you cite examples globally if this sort of thing has happened? Because the number of people which work in this ecosystem, is very, very large, not just here but around the world. What is the global experience?
So generally, globally also there are markets, which are kind of dominated, which move toward duopoly. Now, what exactly happens here is that, once you see consolidation, once the market becomes smaller in terms of number of players, slowly and steadily the kind of take rates actually come down over a period of time. And, US market, China market, there have been cases when there have been, it's a duopoly market or it's a monopolistic kind of a market, something similar to what there is in India right now. But clearly, each country has its own kind of economics. So over there, a take rate of 5, 8, 10% would be fine. But, for a country like India, which is kind of, looking to really take off, and there is stiff competition also, mind you, from the organized players. So what exactly is happening is that last year when NRA actually came up with these kind of issues that, they want to go against the aggregators and they really want them to start charging a lower take rate. We believe that there was no concern as such, because clearly this is not a valid point. But if CCI is probing into it, then definitely there could be some kind of serious concern. There could be some kind of capping, in terms of the take rates. And we've already seen that a lot of disruption has already happened in this space. A lot of these direct ordering platforms like DotPay, Thrive, they have already started extracting a lot of order volume from the premium restaurants. Now, what exactly happens in that case is that for a premium restaurant, your order value is effectively 2x of what a Zomato average order value would be. So whatever absolute money you're paying in terms of commission or take rate, for the premium restaurant, it makes more sense, to tie up with a direct ordering platform, because they don't want to pay such a high amount of take rate. So effectively, we can look at a situation wherein there is some kind of capping introduced on the take rate. It is not a factor of AOV, because once it's a factor of AOV, the take rate can be phenomenally high once the order value goes up.
Karan, good morning. Now, since we have you with us, I just wanted your thoughts on one more stock, Jubilant FoodWorks. Do you think it sort of made some kind of a bottom? Would you buy it from risk reward point of view here?
Right, so Jubilant FoodWorks, we upgraded the stock and we believe that 2,500 was a bottom price. The stock has already moved up by close to 10 to 12%, in the last about 4 to 6 weeks. And I think, there is momentum, further, for the stock to move on from here, because I think near term, there could be some revenge consumption around dining. But structurally, I think two things that work very favorably for a Jubilant FoodWorks. One is clearly the scale story, which is there in terms of growth and the new business initiatives. And the second big driving factor is going to be delivery. So delivery is going to come back stronger than ever after the revenge consumption of two waters happen from here.
Okay, we'll leave it there today. Karan, thanks.